Welcome back to The Explainer. I am just so thrilled you're joining me today, because we have a truly fascinating corporate story to unpack. We're focusing our lens on ams OSRAM, decoding their massive and honestly pretty complex financial turnaround across the 2025 and 2026 timeframe. Now, if you've been following the semiconductor or automotive tech spaces, you already know the last couple of years have been an absolute roller coaster. But how does a global giant actually right the ship when the waters get that choppy? Well, let's find out.
Okay, let's dive into this. Before we hit the hard numbers, let's just quickly ground ourselves in what ams OSRAM actually makes. They are an absolute titan in optical solutions. They power all that invisible tech in everything from advanced LED car headlights to the sensors tucked inside your smartphone and even vital medical equipment. But as you'll see, even the biggest titans out there aren't immune to macroeconomic headwinds.
And to really grasp the sheer scale of the organization we're dealing with, let's start right here. 3.32 billion euros. That was ams OSRAM's total revenue for the 2025 financial year. It is a staggering amount of money, really showing their deep entrenchment in global supply chains. But here's the kicker. That massive number actually represented a modest 3% decline from the year before. And that little 3% dip, that was the exact catalyst for the aggressive turnaround strategy we're going to examine today.
So, here's our roadmap for today's Explainer. We'll start with a 2025 financial overview, then dive into the turnaround strategy itself. After that, we'll break down their business segments, look at divestments and deleveraging, and finally wrap up with future growth and their Q1 2026 performance.
All right, Part 1, the 2025 financial overview. Let's look at the headwinds they were facing. It really was the perfect storm of external pressures that drove that 3% revenue drop. First off, foreign exchange impacts. Specifically, a really weak US dollar against the euro literally wiped out a 9-digit amount from their top line. Just gone. Throw in some major supply chain volatility, like automotive customers waiting to order at the absolute last second, plus brutal inflation on essential raw materials like gold, and yeah, you've got a massive financial headache on your hands.
Now, when a company is facing those kinds of massive headwinds, cash is oxygen. Plain and simple. You need positive free cash flow, which is basically the cash a business generates after paying its operating expenses and maintaining its capital assets. And here is the light at the end of the tunnel for ams OSRAM. Their 2026 guidance actually expects this critical metric to exceed 300 million euros, and that's including their divestments. They've been aggressively restructuring to make absolutely sure cash keeps flowing into the business, not just pouring out of it.
Which brings us to Part 2, the turnaround strategy. Management calls this reestablishing the base.
And honestly, step 1 of this strategy was pretty ruthless. If a unit wasn't a core, highly profitable semiconductor business, it was on the chopping block. Step 2 involves some really tough calls, streamlining the organization and reducing the global workforce by over 2,000 jobs. Then, Step 3 was all about deleveraging the balance sheet. It was harsh medicine for sure, but it worked. These painful measures actually generated 220 million euros in run rate savings by the end of 2025 alone.
Moving right along to Part 3. Let's break down the segments and see what's actually driving their revenue. Now, what's really interesting about this breakdown is seeing just how heavily they rely on their core semiconductor divisions. Out of that 3.32 billion euro pie we talked about, 41% of it is opto semiconductors, so think high-end automotive LEDs. Then another 31% comes from CMOS sensors and ASICs for consumer devices. The rest is lamps and systems at 28%. So ultimately, a massive 72% of their entire business is just a pure high-tech semiconductor play.
But where is all this business actually happening? Well, despite having very deep European roots in Austria and Germany, their footprint is incredibly globalized. Look at this. Over half of their revenue, 53%, is generated in the Asia/Pacific region. EMEA accounts for 27%, and the Americas bring in the final 19%. This massive geographic spread is exactly why those foreign exchange rates and global supply chain shifts we mentioned earlier hit them so profoundly. It's all connected. Okay, Part 4, divestments and deleveraging. This is where we get into the real balance sheet cleanup. Remember that first step of the strategy we talked about, focusing only on the core? Well, this 670 million euro figure right here is the direct result of shedding everything else. A huge chunk of this cash actually came from selling off their entertainment and industry lamps business to Ushio Inc. They basically stepped out of the literal spotlight so they could focus entirely on the silicon.
But here is why this matters, and it's absolutely crucial.
ams OSRAM isn't just stuffing that 670 million euros under a mattress for a rainy day. It is aggressively earmarked for deleveraging, which simply means they are using it to pay off existing debt and decrease their financial leverage. In fact, they've already mapped out plans to use 130 million to immediately pay down financial indebtedness tied to convertible bonds and senior notes. It is a highly disciplined cleanup operation.
And what's incredibly validating for the company is that the broader financial markets are actually recognizing all this hard work. Take a look at this quote from the major credit rating agency, Fitch. Despite the really challenging market conditions, Fitch pointed out that ams OSRAM's profitability actually improved in 2025, specifically because of those efficiency measures. Their calculated EBITDA margin bumped up from 10% to 12.8%. And because of that disciplined restructuring, Fitch officially revised the company's outlook to positive and affirmed them at B. Having third-party validation like this, it just proves the painful medicine is actually curing the patient.
Finally, let's head into Part 5, Future Growth and Q1 2026. Let's look at some early victories.
The early signs of a turnaround victory are already flashing bright green on the dashboard. In the first quarter of 2026, ams OSRAM didn't just meet market expectations, they actually exceeded their Q1 guidance. Their core portfolio, the highly profitable stuff they kept after all the divestments, grew by a very healthy 9%. Free cash flow turned positive, and they are making rapid, aggressive progress in their next-generation technologies.
Literally, this is exactly what a successful reestablishing of the base looks like in practice.
And the absolute crown jewel of that future growth is what they call digital photonics. Think of this as the digitalization of light, combining super advanced emitters and sensors for cutting-edge stuff like autonomous driving and augmented reality. Their proprietary digital light technology, specifically their EVIOS brand for high-pixel automotive forward lighting, has already secured over 500 million euros in design wins. 500 million! So this isn't just some abstract concept. Automakers are actively buying into this exact technology for the cars of tomorrow. It's building a wildly compelling story for explosive future growth.
So what does all this mean for the road ahead? It leaves us with this final, somewhat provocative thought to wrap up our explainer today. We've seen the brutal headwinds, the aggressive restructuring, the balance sheet cleanup, and now this real breakthrough momentum in early 2026. The financial markets have absolutely started to notice. But when you look at their massive pipeline in digital photonics, you have to ask, is this successful turnaround already fully priced into the company's valuation? Or are we just witnessing the very beginning of ams OSRAM's next great chapter? It's a fascinating question for anyone watching the tech sector right now. Thank you so much for learning with me today, and I'll catch you in the next explainer.